All right, so what we're going to talk about today, wrapping up 2024, right? We're getting to the end of the year. What do we do to wrap up the end of the year and also prepare for the oncoming year, right? Something we always talk about when we do our budgeting, our war planning. What changes between December 31st and January 1st? Nothing, right? It's just a day. So we're coming up on the end of the year. We got to start wrapping up our year. We got to start wrapping up our P&Ls, our taxes, right? That's what we're going to talk about today, and to really focus on what we need to focus on next year. All right. Why is it not progressing? Oh, I have so much trouble. There we go. Okay, first topic, we're going to do financials. So I'm going to give you 9 bullet points, or I'm going to give you 9 topics for finishing out 2024 and going into 2025. And I'm going to give you some bullet points around those topics. Okay, bullet point number 1, financials. Getting your financials cleaned up. I'm going to go ahead and populate these. I should have probably just done this. Okay, reconcile your accounts, right? Make sure your P&L is clean. Okay, make sure you have your chart of accounts clean. Make sure everything's in the right bucket, right? Make sure everything is clean so we can wrap up the year. Your tax people are going to love that, right? Make sure we can wrap up the year clean, get our taxes paid on time, and then start the year, even more importantly, start the year clean going into 2025, right? So review financial statements, reconcile accounts, review financial statements, making sure we have our year to date complete, making sure it's all cleaned up, right? Making sure it's reporting the right information. If you're on a cash basis or an accrual or both, making sure those are clean, and just making sure everything's cleaned up on your financial statements, right? This is all information for tax preparation, right? So we're going to organize all of our records for deductions, right? Our incoming reporting and our tax filings. Okay, so your tax preparation. Next one, accounts receivable, and payable, right? Accounts receivable. I don't know if you guys have accounts receivable. If you do, right, we always want to get that collected. We always want to have an AR process. We'll get a little deeper into that here in a second. But making sure we're collecting deposits up front if we have AR commercial businesses, and making sure we have a plan to collect that money, right? Otherwise, it's going to hurt our cash flow, and we got to get it cleaned up for year end, right? So collecting overdue invoices and also paying overdue invoices, right? So your AP, making sure we have everything settled up before the end of the year. All right. Budgeting and forecasting. We just went through war planning here at CO Warrior back in October. We actually have another war planning call coming up next week, right? You have to have a budget for 2025, right? Budgeting and forecasting. How do you know where you're going to go if you don't have a plan, right? We strongly believe here, I'm kind of the budgeting guy. So we strongly believe here that we need to focus on what we're going to accomplish next year from a budget perspective, right? Not just revenue, but how does it back into that and break down on how many calls I need, how many based on my conversions, right? Phone conversions, field conversions, based on all my average tickets, right? Determine how many calls I need because it's going to lead into my marketing, which we're going to talk about here in a second. Okay. Audit preparation, getting ready for your audits, gathering documentation for any required external or internal audits, right? Whatever that looks like. I would suggest talking to your tax person about that, right? We're not tax people. I can tell you what to have ready, but I'm going to tell you to talk to your tax person, right? Because that's going to be your best bet. Evaluate performance. Assess year-over-year financial performance and key metrics, right? So as we're building our budget for next year, we're going to look at past history, right? We always pull at least 3-year past history, right? To be able to build your ebbs and flows and understand how your revenue is going to fluctuate, right? There's always some patterns there. So we want to make sure all that's clean and we can document all of that. Okay. Verify employee records. This is probably one that gets missed a few times by business owners at the end of the year, right? Making sure we have everything from our employees dialed in, confirming payroll, right? Benefits, retirement contributions are correct, making sure all of those things are clean going into the end of the year, right? The cleaner they are going, and again, this is 2024 going into 2025. So the cleaner everything is in 2024, the better it's going to be starting the new year, right? And then you won't have as much hassle at the end of next year. Okay, review loans and financing. Got to add one. Review loans and financing, check loan balances, and prepare for upcoming obligations, right? Again, that's going to be on your balance sheet. That's more than likely not going to be on your P&L, but we got to make sure that stuff's clean as we go into the end of the year. Okay, and then tax compliance, which I already talked about a little bit. Ensure all forms, examples, W-2s, 1099s are ready for distribution, right? Making sure we're prepared for tax compliance. Okay. So that's bullet point number one. That's financials. Do you guys have anything to add to that, Kev or Dan or anyone?
No, nothing to add. Just, making sure any questions about any of that stuff, where do how do I find it? Who
Where
do
do
I
I
need?
get it?
Jay had a good, a good understanding, your tax, your preparation, your compliance. Hit up, if you're using a payroll company, hit up your payroll company to make sure everything is in line, right? When you're looking at your employee records, does everyone have all the paperwork signed? Do you have people on your team that never for some reason signed onboarding paperwork? Like, I received um the handbook. I agree to the handbook. I understand my responsibilities for having a credit card. All those things, if you have those, did they sign it? Is everyone in the right place as an employee? Just got to make sure that those things are set, and no better time than the end of the year. So you at least going into 2025 right now, all that stuff is behind you. You're not carrying that unknown dead weight and potential liability into 2025.
Yeah, good point. As you guys are going through this, I would start, and this is where we're going to start here, right? I would start making a year-end checklist, right? Which is kind of what we're doing here, but making a checklist because there's so many other things that go into these topics, right? Because I'm sitting here as Kevin was talking, I'm thinking about financing paperwork and making sure all that's cleaned up, right? There's just so many. He talks about an employee handbook and making sure all that's cleaned up and signed off on and everything's in proper order. Making sure you're getting with your subcontractors and getting your 1099s out and making sure you have all your subcontractor agreements cleaned up before the end of the year. All right, make sure you got everybody paid. Make sure anybody that owes you money gets you paid. Right, there's just so many things. So start making a checklist, and every year it's going to get better and it's going to get easier. Okay, next one's vendor relations. Okay, review vendor agreements. Right, so making sure we have vendor relations. Vendor relations are so important, and I think we overlook this topic a lot. Right, because the relationship with our vendors is huge, right? Because we got to make that's someone we depend on. I depended on my vendors to do a lot of cycle counting and things like that because that's not what I wanted to do, right? We wanted to go out and we wanted to take care of clients. We don't want to spend time working on inventory. That's what we had suppliers for, right? So making sure our vendors are dialed in, right? So reviewing vendor agreements, if you have those, we had consignment agreements, pricing agreements, things like that, right? Making sure all that's cleaned up, signed off on, good for the end of the year, and also ready to go for the following for the next year. Right? Settle balances. Again, we talked about this earlier from your AP perspective. Make sure everything's all settled up, right? It's hard to build a vendor relationship if we owe them money. Right. So making sure our cash flow is in good shape and we get settled up with our vendors before end of the year. Evaluate vendor performance. This is a huge one. I think this is one where we miss a lot. Um, Assess reliability and quality, right? We don't look at the quality from our vendors a lot of time and our distributors. We look at price. It is about price. It's not all about price, right? That's not all the relationship. Making sure we're looking at the pricing from the vendors, right? That is also something that's super important. That's not everything. Like I said, it's part of the relationship, but we still have to make sure that they're providing us the right price. It doesn't have to be the lowest price, right? It has to be the right price, and we have to get what we're paying for. Okay, negotiating terms. Just
Hey, can I
discuss.
jump in there for a second?
Oh, absolutely. You jump in there anytime you want, my friend.
So I wanted to talk on something. I'll just forget if I don't talk about the vendor
Do
agreements
it.
and the negotiate terms. Um, you know, the evaluate the vendor performance, the vendor agreements and negotiate terms. We spend a lot of time, especially as we're up and coming as organizations. We're going from, 200,000 to half a mil to 1 million to 3 million and above. And we're very loyal to the people who got us there. And I'm not saying that you break loyalty with your vendors, especially if they're really taking care of you. That's a value add that you need to actually look at when you're looking at your vendors and you're evaluating the vendors and your ability to work with them. Loyalty goes a long way. I'm a big loyalty guy, but every single vendor at the end of the year we looked at and said, if they're not the lowest price, does the service they provide for being a loyal person, is that does that compensate for the difference in price that I'm paying? I'll pay a little bit more. Similar to me personally, I'll go to a small hardware store, family-owned hardware store, instead of going to Home Depot or Lowe's if I can and it's convenient. Why? I'd rather support the local hardware store. So something in your business might be looking like that, but at some point you have to recognize that using the smaller vendor, the one that's really loyal to you, the one that you can call on a Saturday morning and they'll pick up the phone, that has a value proposition just like our selling a service has a value proposition. You have to weigh it out over price. So no difference between that. And so I just want to make sure that we touched on that because again, loyalty goes a long way. But when you're looking at this, we're talking about financials and relationships. Relationship loyalty. Financials doesn't always work out that way. You have to make a decision of whether or not they're not the cheapest. What is that worth to you? And see if it equals that again, value proposition being higher than what you're paying for the product or service.
Yep, great point. Yeah, and I mean, vendor relationship goes both ways, right? So when we have loyalty with a supply house or someone that we purchase from all the time, we just assume that they're taking care of us, right? And part of the relationship on their side is to making sure they're taking care of us, right? So they give us good support. That doesn't mean we pay whatever we need to pay, right? It doesn't mean we have to get them knocked down the price all the time, right? We're not going to beat them up on price all the time, but we do need to make sure we're keeping them honest. They're not going to necessarily charge you more on purpose, right? But things happen. But we got to do some price adjustments, price checking, check with some other suppliers just to make sure they're still in the ballpark. So great point, Kev. So negotiating terms, bulk discounts, right? Something to think about coming up at the end of the year, right? If you can get a bulk discount by buying a lot of water heaters, right? Or buying some HVAC equipment that you use a lot, or buying some generators, look at doing that because you get a good tax break there, plus you get a good price break, right? As you're spending money going back into the business, that's going to help you on your taxes. So look at bulk discounts right now, right? Example we bought a bunch of water heaters at the end of 1 year because they were going to a different code to the next year, right? Until they used all the old ones, you didn't have to add the new ones. So we bought a bunch and stocked them all up, and got them at the lower price before the new code restrictions went in. So really start looking at that with your suppliers. That's part of their relationship of things they should be letting you know as well, right? That's part of the relationship. Extended credit terms and other benefits for the new year, right? So whatever that looks like, whatever benefits you're looking for. Like I said, I wanted to go consignment with and I'm not suggesting this by any means. This is just what I wanted, right? I wanted consignment. I wanted them to do the cycle counting. I didn't want to pay for my material until I used it, right? I wanted to make sure they gave me cycle reports of if something wasn't turning, right? Because they're all about turns. Inventory is about turns. And if it wasn't turning, let me know so we can get it off there and buy use something that does turn, right? That's good for everybody. Okay, update contact information, right? Update contact information. That's a really good practice to get in for the end of the year. It's a good practice to get in probably quarterly regardless, but definitely at the end of the year, right? Making sure you have the correct contact information for them, making sure they have the correct contact information from you, right? Making sure you're getting the bills sent to the right place, making sure you're sending payments to the right place, right? Making sure the way you're making payments is set up correctly, right? And just making sure you're taking advantage of that and you're cleaning all that up. Build relationships. We already talked. We kind of got ahead of our game on that one. Building relationships, acknowledging key vendors with thank you notes and year-end appreciation. They love that stuff, right? That's just letting them know that you appreciate that relationship, right? The vendors that you guys work with, vendors I always worked with, always gave us stuff, right? They gave us tools for our guys. They gave us gift cards at Christmas. They always gave us stuff because they appreciated our relationship. Make sure you reciprocate that back to them, right? That goes a really long way from a loyalty perspective, right? And then plan for next year, align vendor partnerships with your business goals and supply needs, right? We just built our war plan. We just built our budget for next year. What are we going to need from a supplier, right? We're going to know what our material spend is going to be. What's our most effective way to get that? Use your buying power if you have that, right? If you're a larger business and you're doing a bunch of purchasing, use your buying power, right? To get some prices set in stone. Even if you can't get the best price, one thing I suggest is getting your prices locked in for certain amounts of time, or have a communication process. If they have to raise prices, they give you a certain amount of time of notice before they raise the price, right? Because that gives you an opportunity to update your pricing and all things like that. So put those agreements in place. Okay, that's vendor relations. You guys got anything to add to that, or does anybody have any questions before we move on to the next one? Take that as a no. Okay, inventory. One of my favorite things. One of my favorite things that I don't like to deal with. All right, so conduct a physical inventory count. Everybody hates this one, right? The year-end inventory count, if you've not done it all year, will come back to bite you. So I'm going to suggest a couple of things here. If you haven't done a physical inventory count, do that. Get it cleaned up, get it straightened up on your balance sheet. It's going to put a hit on your P&L, but get it cleaned up. It has to happen, right? Get your inventory levels back to where they're supposed to be. For 2025, put something into place where you're doing it at minimum quarterly. You should be doing a physical inventory count of your vehicles and your warehouse at least quarterly. I prefer to do it monthly. That might have been a little overkill. I'm a little anal in that way, but at least do it quarterly. Then you don't get to the end of the year and you take that hit. Okay. Update inventory records, adjust discrepancies in your system. Once you've done your cycle count, clean it up in your CRM, whatever software you're using. Get it cleaned up, making sure your inventory levels are correct. Right? Making sure they're correct going forward too, to be able to make sure if you got min maxes on how you reorder your process or reorder your parts, make sure those are updated based on your turns. Okay, analyze inventory performance. That's kind of what I just talked about, right? It's all about turns. It's all about turning your material. Anything that sits on your truck for a very long time costs you money. Okay, in a consignment world, in any world actually, if it sits on your truck, I'm going to use plumbers for example. If it sits on your truck, it bounces around in a truck for 3 months. It's probably not going to be. You're probably not going to be able to use it. So you're not going to, because we're going to provide an amazing service to our client, and you're probably not going to be able to use that part. It's probably damaged, right? You're not going to be able to return it to the supply house because they're not going to take it back, right? Making sure you have stuff on your trucks that you turn. My general rule of thumb was whatever was on my truck, I wanted to use 80% of the time. It's never going to be 100%. But I could use 80% of that material, the other 10 or other 20%, I may have to go to the supply house and get it. But constantly making those turns. Your supplier and your vendor will help you with that information. Address obsolete stock. Oh, I hated this one. I hated this one. Clear out old and unsellable inventory through sales or write-offs. The stuff I just talked about that nobody will take back and you can't install in a customer's house, guess what that is? That's obsolete inventory that you just ate. You're just going to take money and you're going to throw it in the dumpster. Okay, so making sure we're doing those turns and we're keeping everything fresh so we don't have obsolete material, right? That's nothing but an expense hitting your bottom line, which is super, super painful. Review stock valuations. That's what I already talked about. Making sure we have the accurate amounts, right? Making sure we have a minimum amount, making sure we have the maximum amounts, knowing what those numbers look like. We should always be evaluating that and changing those. And because we always want to make sure we're, again, turning our material and making sure we have the stock on our trucks that we need to have so they're able to do their job and not have to drive somewhere and get their parts, right? Your biggest loss in your billable efficiency is that someone driving to the warehouse or spending time in their truck, period. Right? So the more they have on their truck, the better, more efficient you're going to be, which is more profitability for you. Assess supplier fulfillment. Evaluate lead times and order accuracy for replenishment planning, right? That's one of those things that goes along with that relationship. Making sure whatever you need, your supplier can get it to you in a timely fashion. I had deliveries from my supply house coming every day. Okay. Every day they replenished whatever I used the day before. Well, it ended up being like 2 days out, but they would replenish it back the day after, right? It would go right back on my guy's truck. And we constantly kept those minimum levels up. And most of the time they were at their maximum levels, right? So keeping that material turning, keeping that material reordered and back on the truck so the guys can stay efficient. Okay. Assess supplier fulfillment. That's the one I just did, I think. And plan for the new year, right? All the things we just talked about. Make sure we're setting the proper levels for next year.
Jay, how would one go about making sure they understood what their mins and maxes should be?
Good question. So the way I did it was my supply. So I had a starting point, right? And I put on my trucks what I thought they should have. But your whoever your supplier is should be able to help you with that as you go through the process. It's almost like a reforecast, right? So if I say I need 10 3/4 copper 90s, but yet I'm running out before the guys get their stuff back, the supply house is going to be able to let me know that I need to increase that maximum, increase the maximum, and increase the minimum, right? So it's a constant review. Again, I'd say that's probably quarterly. But you're what I wanted to do is I want my supply house just tell me.
Yep.
I just say, hey, you're using this size sump pump more than you're using this size sump pump. Do you want to add another one of these to your trucks? And keep one of the other ones on the truck, right? So it was constant communication. That's where all that relationship comes from.
Got it. Got it. And that would change if you had supplies and material in your warehouse, like a separate
Yeah,
area where you basically went first before you ordered. Yeah.
yeah. So my trucks were mini warehouses, right? And then I had warehouse stock as well. So it was all the same process. So they would always let me know, right? They had their own ID areas, right? So like if it was my warehouse, they would let me know what I was turning the most in my warehouse, right? Which typically filled up full, flooded over into what I was using on my trucks. Okay. Were we done with inventory? I think we were. Employee and staffing. So let's talk about that. Wrapping up the year with employees. This is always so much fun. Employee reviews, conduct evaluations, and set new goals for employees, right? Do an evaluation of how, I'm going to back up a little bit. You should be doing evaluations of your employees more than once a year. Okay. As you're getting to the end of this year, if you've not been doing them, do them. Okay, do your employee reviews for this year, do employee evaluations, not only for each individual employee, but go through and employ all of your team members from a business perspective, right? For your own information, right? That's going to help you with your staffing plan for next year. Okay, so doing your employee reviews and setting going over their goals with them, going over their KPIs that you have set for them, right? Creating clarity there, and then going over their new set goals that they're going to have for next year. Okay, I know Kevin's gonna have. That's what I was saying as we got kicked off. This is like Kevin's wheelhouse, so I know he's gonna have a lot to say on this one. So, employee evaluations, right? So making sure we're getting those done. Training plans, identify and schedule necessary training and skill development, right? Understanding where our needs are for our team. Where do we need to provide training for our team? Externally, and just figure out where your downfalls are and making sure we're getting some training in. Compensation adjustments, that's going to come off with performance reviews, right? I said do reviews more than once a year. It doesn't always mean they're going to get a raise, but you're going to do a performance valuation and a salary adjustment at least once a year, right? So making sure that's part of your performance evaluation, part of your reviews, making sure it's consistent for each and for everyone, right? And you have a good scoring mechanism to make sure that all makes sense. Bonuses and incentives, decide on and allocate year-end bonuses for profit sharing. That should be decided well before now. Everybody should know what that looks like and should know what the profit sharing looks like or if year-end bonuses. There's a lot of people and probably a lot of people that are going to watch this recording or on this call that give out Christmas bonuses. Okay. I'm not opposed to that, or end of year bonuses. I'm not opposed to that, but there needs to be a performance perspective around that. It needs to be some sort of profit sharing, right? What I don't want to do is have cash flow challenges and not hit my numbers all year and just give bonuses out because I feel good about it, right? Make sure it's attached to performance. Make sure we're hitting a certain number to be able to pay.
So I'm gonna kind of double back on what Jay was saying. Performance reviews are super important as far as scorecards, having a review on multiple. Jay, can we go back to performance reviews for a
Yeah,
sec?
it's
Yeah.
kind of work. It's kind of just working on its own. Our internet's janked here. Okay,
Yeah, yeah. I just went on my phone, by the way.
I'm gonna have to.
So the like Jay mentioned, if you use your performance reviews at the end of the year, depending upon good or bad, anything that's not bad, like you suck, you're happy to have a job, is going to get asked as is going to get assumed or perceived as, well, I didn't get fired, so I must be getting a raise. And you can live in that cycle if you wish. I just don't I don't think someone should have to wait till December 31st to get a raise for the job they did from January 1st of the previous year, of the same year. Like that doesn't make sense to me. pay them accordingly, give them the opportunity to earn, and that's where you're looking at, and that covers in performance reviews their compensation, what kind of training they need, because if they're falling down on something, then they're going to see that in their training, or you're going to see that in their performance. You're going to know what to train on them, right? So that makes a lot of sense as far as not making sure that you're not just reviewing once a year at the end of the year, and because the person is still employed, they're going to assume they want a raise or they deserve a raise. It's not exactly the best way of, in my opinion, of doing it. Um, yeah, Gabe, what you got?
It's a quick question as far as like not everybody's out there performing out on in the van, right? So, but even though like let's say like your apprentices, how did you guys handle like bonuses for your apprentices at the end of the year? Because obviously they're getting paid hourly, they don't qualify for the spiffs and bonuses because they're not generating revenue. So how did you guys handle those?
So
So
all,
our I was gonna say our end of the year profit sharing was
yep,
available to everyone,
yep,
right?
exactly.
So based on their stature in the business depended on how much percentage of that they got, right? Also, it was also performance based. Okay, so my lead guys that were producing revenue and what have you, their percentage was based on the level they're at with their experience and their performance. Helpers had a percentage, and really they had KPIs they had to hit too, right? Show up to work on time. Make sure you wear the proper uniform. None of the guys need to complain about you. Make sure you're a hard worker, right? You can create KPIs for them as well. It was all performance based, but it was based on a percentage of level of experience and time and tenure.
And my incentives weren't always at the end of the year financial.
Correct.
So, like anyone that was in good standing that worked as an installer, a service expert, plumbing, electrical, or HVAC, they had the ability to go and they had I think it was like $250 credit at the local hardware store, like a Home Depot or Lowe's or wherever they wanted to go, and that's how they upgraded their tools, bought new tools. That was $250. That's their incentive for the end of the year. Congratulations, Merry Christmas, Happy Holidays, whatever you want to call it. Here's what you do. Go. Here's your PO for holiday. Go do your buy whatever tools you want. $250. If it's 280, you better be chipping in your $30 yourself, right? And they just used their own company card with a PO they got from the office, and we just knew. Now again, 250 was really relatively easy when we had 10 guys out in the field. As we grew, 250, 250, 250, do the math, every four people is another grand. It got a little expensive, but we still wound up doing that. And that way for my installers, because I asked them, what do you want? You want a $200 bonus, or you want to go get new tools for $250 and just, say it's on me? And I really thought they were going to say the cash. And when they didn't do that, and they said we wanted the tools, they wanted the upgrades, they wanted this, they wanted that, $250 on a new set of gauges. Yeah, it's not going to buy a new set of gauges for the HVAC guys, but maybe they get the better ones and put in the money for themselves. They knew it was coming at the end of the year. They had the ability to kind of budget for it if they wanted to upgrade maybe one of their bigger pieces. And those guys loved it. They would take pictures and uh they would upload their pictures to Facebook or Instagram or wherever the hell they put their pictures, and they send it to their friends saying, "Hey, look what my work did for me." Well, that's pretty proud, but you want to talk about what's a really nice recruiting function? That their buddies saw, holy crap, you go work at CNC Myers and you got all those tools, just a front seat full of tools. And it wound up being a really nice cultural build. So bonuses and incentives doesn't always have to be financial. And Gabe, I'm right there with Jay. It was, if there was a profit share at the end of the year, I already budgeted that for in my plan, in my war plan for the prior year. I budgeted, if we went above, how much of that was going to go back to the employees as a profit share, and then out of that, how I allocated that, let's say we went 10% over. That 10% over, how I allocated that was based on performance and tenure.
Okay.
Cool.
I got that. Yeah. Gotta
Cool.
sit down with Jason.
In other words, sit down with Jay.
Yeah.
Good question, Gabe. Thanks. Retention strategies, right? We're always talking about how we always need recruiting. We always need to hire people, right? We need to focus on our current culture and making sure we're retaining people as well. A lot of people don't like the word culture, but we find culture here at CEO Warrior super, super important because that is a retention strategy, right? You don't need as many people if you have a good retention strategy. Also, that helps with your recruiting, right? Because now you have referrals from your current employees. So making sure we have some retention strategies, whatever it is to make your people happy. And then compliance checks. Make sure this is the nerd saying compliance checks. Make sure all these bonuses and spiffs and all these things are in compliance with how you should be paying them. Kevin hates when I say this. Be careful giving out cash. I know we love to give out cash. I know people love cash. Be careful giving out cash. Okay, because that's not always in compliance. Okay, on to the next one, marketing. Marketing customer relations. Okay, so evaluate marketing ROIs. What does that mean? You got to know your marketing numbers, right? All the numbers we talked about earlier on, we got to know our KPIs on our marketing. What's our return on investment, right? What's our cost per lead? Where should we spend our money, right? Where should we not spend our money? It's super important that we know our numbers on our marketing avenues so we know where to put our money, right? So as we just came out of war planning, we just built a marketing budget, right? Now we actually have a marketing call to determine where we spend that money, right? We know what our marketing dollars are going to be. Now, where do we put them, right? We don't know how to do that without these numbers. So it's super important that you know these, you track them yourself. Whoever marketing company you're using should be able to get these for you. You've got to be able to track these. Okay, set marketing budget. I just talked about that. We like to look at marketing based on what we've done in the past, how to set our marketing going forward. What do we want our increase in revenue to be? How much do we need to spend to get that? And then where do we need to spend it, right? So setting your marketing budget. So like I said, we just set, as CEO Warrior clients, we just set our marketing budget dollar amount. Right now in January, we're going to have a marketing class to decide where we want to put the money. Okay. Plan marketing calendar, same thing. Once we've set our budget, we got to determine where the money's going to go. We got to determine what months we're going to put it where, right? Some of your busy months in the middle of the summer, you HVAC guys, you may not want to spend as much marketing money, right? We want to continue to brand. We don't want to stop marketing, but we may not need it because when it gets hot in the middle of the summer in some of our areas, people are going to call regardless, right? And don't be spending a bunch of marketing money if we're not staffed properly as well. Okay. Refresh branding, making sure everything looks good, making sure everything's clean, making sure a client sees you when you go by. Branding is super important. Enhance online presence, big deal right now, right? Making sure you're working with your marketing company to make sure your website looks good, right? Your social media and your SEO strategies, right? Making sure our our online presence is solid, right? Again, all of these things we're going to talk about what's producing for us because it's different in every market, right? What's producing for us and where do we want to put more money in and drive those leads. Customer outreach, send thank you messages, holiday greetings, follow-ups to build loyalty, right? That's creating a retention of your clients, right? We talked about employee retention. Let's talk about client retention, right? These types of things do that. If they buy a large install, do you send them a gift basket of some sort, right? These are all things that we can do to retain our clients. Referral programs, develop or refine a loyalty referral programs. If you don't have a referral program in your business, I suggest you create one, okay? How can you get a cheaper lead than Aunt Linda next door telling the neighbor that they want to use your services because they loved us so much, right? It's super important. That is the best and cheapest marketing strategy you can have, right? So make sure you got a referral. Give the client that referred them something, right? Give them something. Give them an amount off, send them a gift card, send them a gift basket, whatever it is, right? Create a referral program. Address feedback. So resolve outstanding complaints, leverage positive reviews for marketing. This one's super important. Do not let these fester. You get a bad Google review because you don't want to deal with it and you don't want to deal with the conflict. Don't let it continue, right? You have to answer all of those, right? Don't argue with the client, right? But we have to respond to all of those. What we know is that, and with negative reviews, most people will look at the responses and hold more stock in that than the actual complaint, right? So it's people make mistakes. People understand that. They just want to see that we're willing to take control of that and take care of it. Okay, customer data review, update and segment customer databases for targeted outreach, and then plan community engagement, identify opportunities for sponsorships and community involvement. That's also another form of branding. Get your name out there, right? Your kid plays Little League, wear your shirt, right? Brand at those things. Does everybody in your community know what you do for a living, right? Does everybody know that you do HVAC? So when they have a problem, they call you, right? If they don't, they should. So making sure you have community outreach. Kev, anything to add there?
No, I think that's spot on.
Cool. I don't want to run over here, so we're going to keep rolling. Okay, operational efficiency. All right, process review, right? Something you guys all love, I know. Reviewing your processes. How can we be more efficient going into the new year? What do we need to update our processes? Is it a PO process, right? Is it a restock ordering process? Is it a customer complaint process? Is it a install cancellation process, right? Is it an unclosed call process? What does it look like, right? Updating your processes and making sure everything's dialed in, making sure everything's documented, making sure everything's in your handbook. Okay, KPI analysis, evaluate key performance indicators like job completion rates, technician productivity, right? We talked about KPIs earlier, making sure we're tracking conversion rates on our field, conversion rates on our phone. We got to be listening to phone calls, making sure we're being the most effective there, making sure we're tracking our average tickets. We got to look into pricing, right? We got to make sure that makes sense. And again, just making sure we're tracking our KPIs and keeping an eye on those things. Technology assessment, make sure you're using the proper technology that you need to help you be the most efficient in your business, right? Some people, I won't use any CRM names, but some people go to larger CRM sometimes because they think it's going to be their fix, right? CRMs they're only as good as what you put in them. It doesn't matter which one you use, right? If you got garbage going in, you're getting garbage out. So make sure you're using your current software to the most of its ability and being super efficient before deciding to jump ship and go on to something else. Safety and compliance, ensure workplace safety protocols. Super important. That's most of one. I mean, that was one of my core values. I know that was one of Kevin's core values, safety first, right? We got to make sure we're safe. Not only do we want our employees, most importantly, we want our employees going home and to their families every night, right? But on a second hand, we want to make it's a huge expense to the business, right? So most importantly, obviously, we want our employees to be safe, but there is a financial aspect to that as well. So make sure our safety compliance and everything's up to date there. Equipment maintenance, inspect tools, vehicles, and equipment for repairs, right? Making sure everything's operating efficiently, making sure everything's safe, right? Also, as we go into our budgeting, making sure we have all of the proper tools for going into next year so we can be the most efficient and hit our budget for next year. Customer service standards, evaluate and refine processes for call handling, scheduling, and follow-ups, right? That's going to come back to what's the process and then training, right? Making sure we're doing the things we're supposed to be doing and making sure we're holding them accountable and we're tracking those things. Documentation updates kind of falls along the lines of processes. Ensure all operations manuals, SOPs are current. Make sure your employee handbook is current. Clean it up at the end of the year. Make sure it's clean going into the beginning of the year. If you have to have sign-offs and things for some employees that maybe you missed throughout the year, make sure you're getting that done. Right. So making sure your employee handbook is good and clean and it covers everything that you need it to cover. And then, of course, plan for growth, right? We're going to do that through our war plan, through our budget. We're going to dial in what our plan for growth is. And then we're going to take it down a notch to build a plan on how to get there. Anything on that?
Two quick things.
Yep.
On safety and compliance, Often, I know with us, your workers' comp will have a minimum number of safety meetings you should have had throughout the year. Make sure you had them. They're not huge fans that you do the last week of December, 15 safety meetings. So be conscientious about that. And then one other thing for operational efficiency, if you're in a business where certifications for your employees are important, like NATE certification, EPA certification, um, something that has an expiration date. Your Jay and I were just talking about this. Your forklift driver, is his certification or her certification up to date? Did your guys take the right classes so that they keep their NATE certification instead of losing it and going through all that? Right? Make sure that all of those things are in play and any expiring certifications are taken care of.
Cool. Okay, equipment and fleet maintenance. That's where we're at now. I'm gonna try. If you guys have questions, stop me. I mean, we're gonna get up against our hour here, so I don't really want everybody to run over. Okay, equipment, fleet management, performance reviews. We kind of talked about that earlier for our employees. We want to assess financial, operational, and marketing results against goals, right? So that's our equipment and fleet management. Set goals for next year. Define clear targets for revenue, profit. I think that's correct. So I don't think my title is correct. Anyway, these are all things you should do. Budget planning, we've already talked about that. SWOT analysis, making sure you're knocking out 90-day plans. I'm going to jump off of my notes here because I'm going to talk about equipment and fleet management. How many trucks do you need? Like, what's your truck plan, right? We've already determined our employee staffing. What does that look like? How many vehicles are we going to have to purchase? We need to build that into our budget, right? If we're increasing our call counts or we're increasing our service area or something like that, we need to make sure we account for the fact that we're going to spend more on fuel. What are our truck repairs look like? I always want to evaluate my vehicles because as some of them get older, they cost us more to do repairs, right? And at that point, we need to determine if we want to actually swap them out or not. Okay, so that's kind of the equipment fleet management, making sure everything's good to go, making sure if we need to replace vehicles, this is the time to do it and we budget for it. If we need new vehicles, we budget for it, making sure we're taking into consideration repairs on some of the older vehicles, and then making sure we're tracking our fuel. Of course, we need to make sure we're managing the insurance portion of that.
And yeah, registration as one other piece, as well as if you have leased vehicles or finance vehicles, see if there's a refinance. Save you a little bit of money. Take a look at what you might be able to save money on for the cars that you are or the vehicles that you are actually paying on a monthly basis for.
Oh, good call. Yeah, we should always be looking at that to see if we can improve our payments and our debt, our cash flow. Okay, tax compliance. Getting you all your information ready for your tax man. That's something everybody loves to do, right? So it's got a list here. Organize your financial records. That was our very first topic today, on how to line all that stuff out, making sure it's all good and clean, making sure your tax person loves it. Reconcile accounts, kind of repetitive of earlier. Prepare tax forms if you have them. If you got to generate W-2s or 1099s for subcontractors, we'd already talked about that. Review deductions, work with your tax person on this. Identify eligible deductions such as vehicle expenses, tools, office supplies. Get with your tax person and see if there's a way, it's important for you to invest back into the business prior to paying Uncle Sam a bunch of tax money, right? So that's something that's super important as you get to the end of the year. How can I reinvest, right? Reinvest back into the business rather than paying taxes. Say again?
That's a great call. No, I said that was a great call. That absolutely.
Depreciation updates, make sure your depreciation is updated on your balance sheet. So make sure we're accounting for equipment depreciation and amortization for tax purposes, right? Again, all things your tax person can help you through. Quarterly tax payments, make sure everything's paid and clean, right? Again, everybody should have a tax person. I'm gonna keep saying that. I'm not a tax person. We're not a tax company. Utilize a tax person. Audit readiness, organize documentation to ensure compliance in case of an audit. State and local taxes, confirm compliance with any state specific tax requirements. and filing deadlines. Prepare for year end and upcoming filing deadlines to avoid penalties. Super important. If you know what your deadlines are and you need to file extension, make sure you do that. We want to avoid any penalties we have as far as filing and paying our taxes. Anything to add to that, guys? Okay. Okay, cool. Last one. We're going to end with a fun one. We just went through a bunch of really important stuff, but also very boring, right? So, oh crap. Don't forget to celebrate and reflect upon the year, right? So acknowledge achievements, highlight milestones, successful projects, key accomplishments, right? We talked about year-end bonuses, profit sharing, all things like that. Like Kevin said, it's not always money, right? Have a year-end party, buy the guys tools, do contests, right? All the things, all the things, just acknowledging our people. That's super important. That's really good for our retention. Employee recognition, celebrate individual and team contributions with awards, bonuses, and public acknowledgement. Post-year and event, I just talked about that. Do that however you want. We always had a big party at the end of the year. We always served food. It was just the employee and their significant other, right? We didn't have kids come to this party because it was kind of a high-end thing. The food was really good. We did some different things, casino nights and things for the employees. Just have a good time and celebrate your people. Review lesson learned, probably not at your Christmas party, but maybe at a different review center, kind of going through your performance for the year for the company. It's super important that they all know that. You don't have to get really deep into the financials, but understanding how strong of a position your business is in is really important to your employees. This is a huge one. Share your vision for next year. Okay, we should be sharing our vision all the time. Our vision, if our employees don't know what our vision is, how do we expect them to get there? Right? You have to have a painted vision. You have to have a vision. Your people have to understand that so you can all be on the same page. Updated at least once a year, right? What's my vision coming into 2025? Not put that out now. Share that with them at the end of the company party or at the company party at the end of the year. Customer appreciation, we talked about that a little bit already. Community engagement, again, do really good things for the community. At the end of the year, get your name out there. It's good anyway, but just getting your name out there for branding. Document wins, right? We're going to talk about that through our KPIs. We're going to talk about that through our reviews and things. Prepare feedback surveys. So let's talk about that for a second. We should always be doing at least yearly an employee survey, right? It needs to be anonymous. We want them to be honest. We want them to tell us what we've done good. We want them to tell us what we've not done so great, how we can improve, right? That we have to be humble enough to be able to take that information, and we'll never be able to grow as a business. And then encourage gratitude, foster a positive culture by celebrating hard work and dedication for all stakeholders. Kev, anything to add to that?
No, I mean, I think this is where we shined. I think as a company, we did a really good job of marking the end of the year with a nice party, a give back. There was nothing, hey, you sucked, right? We weren't giving feedback during this party unless it was positive. It was all a nice celebration for a year well done. Even in the years when we weren't as profitable as we wanted to be, or we didn't have exactly the year we wanted, we still celebrated the end of the year to get the guys on a good path going into January. So this is really super important to accomplish and get done, is have some sort of, and it doesn't have to be extravagant, right? You can have, if you have a warehouse, get some tables, get some food brought in. It doesn't have to be over the top. We had just as much time, but just as much fun having wings and catered by the local wing place in our warehouse, laughing it up, having fun that way than we did when we rented out the Coliseum and had carving stations, right? It was still a great time had by all.
Yep, great point. Be creative on how you pay for those things, right? You can use scrap metal to pay for those things sometimes.
Yep.
Most importantly, budget for it, right? Budget for your 2025 year-end party now, right? And that way it's not a big hit for you at the end of the year. Again, celebrate it on performance. Like Kevin said, it's just a good time to spend with your employees. Okay, one last thing, because we're right up against it here, and I'm gonna get you guys off of here in an hour. So any one of this on here that's not a current member, or would like to know more, reach out to us, jump on our website, schedule a call with our growth advisor. But we have a service business live coming up in Nashville. It's going to be super amazing, March 6th and 7th. There's an early bird special, which on the next slide, I'm going to give you a QR code. If you use this code, the code is 10% off. You get 10% off of a VIP ticket. So what does that mean? It means scan the code, go in there and look at it. And here is the QR code, and we would love for you guys to join us in Nashville. Okay, so there's the QR code. Feel free to scan that. It takes you to the landing page for Nashville, gives you all kinds of information, information on prices and tickets and things like that. It's a really, really valuable 2 days. All right, so guys, I appreciate you being on here today. Kev, Dan, anything you guys want to add before we wrap up?
No, really appreciate you sticking with us for the hour. Sorry about the stuff back and forth with the internet, but that's what happens when you travel.
Technology is great when it works.
Nope, nothing here. Good luck, everybody.
Awesome. Appreciate you guys. Happy holidays, and we will talk to you soon.
See ya.
Thanks, guys.
Thank you, everybody.